Good afternoon, traders, and welcome to the Exchange SA, your home of currency trading edutainment. Right, my name is Majesty, aka the Grandmaster FX, and today I have an exciting session lined up for you where we'll dive deep into one of the most fundamental pillars of successful Forex trading, which is technical analysis. Whether you're a seasoned trader looking to refine your skills or a newcomer curious about the world of trading, understanding technical analysis is absolutely crucial. Right. It's the art of decoding price charts and indicators to make informed decisions in the market. In this video today, we'll break down key concepts, tools, and strategies you need to master technical analysis, from identifying trends to spotting potential entry and exit points. We've got you covered, you know what I mean? So by the end of the session, you'll have a solid foundation in technical analysis, right? Empowering you to make more confident and informed trading decisions. Whether you're into stocks, whether you're into Forex or cryptocurrency or any other market, the principles of technical analysis are universally applicable. So let's get started. Right, but before we dive in, make sure you hit that subscribe button, click that notification bell so you never miss out on our valuable trading insights and tutorials. So now let's jump right into the world of technical analysis and equip you with knowledge you need to take your trading to the next level. What is technical analysis in Forex? All right, so technical analysis in Forex is a method used to evaluate and predict future price movements of currency pairs based on historical price data, volume, and other market indicators. It relies on the belief that past price patterns and trends tend to repeat themselves. Right, traders who use technical analysis examine charts, patterns, and various technical indicators to make informed decisions about when to enter or exit trades. This approach does not consider fundamental factors like economic indicators or news events, but instead focuses solely on price action and market behavior. Right. So you might also ask, why is technical analysis important and what information is needed to conduct technical analysis in Forex? Right. Technical analysis is important in Forex for several reasons. Number one, price patterns and trends. It helps identify patterns and trends in price movements, which can offer insight to potential future movements. Right. Two, entry and exit points. It provides traders with potential entry and exit points for their trades, allowing them to make more informed decisions. Three, risk management, which is very, very, very important. And you will notice that as we trade together in the demo show, right? It aids in setting stop loss levels and profit targets based on historical price movements and support and resistance levels, right? Four, psychological aspects. The most important part, just as important as risk management, psychological aspects are very important, right? Because it helps traders gauge market sentiment and psychology, which can be crucial in making trading decisions, right? And five, for historical data. It allows us to understand how a currency pair has behaved in the past, providing context for potential future movements, right? To conduct technical analysis in Forex, traders typically need the following information. One, you need price charts, right? These are graphical representations of currency pairs price movement over a specific period. Common types include line charts, bar chart, and candlestick charts. But we here on the exchanges say we're going to focus solely on candlestick charts, right? Two, time frame. To choose a specific time frame, right? It can be the hour, the 4 hour, the daily. Time is fractal. It doesn't matter, right? For their analysis, as different time frames can reveal different price patterns and trends, right? And we focus on the higher time frames, and we interpret lower time frames based on what we are given with higher type frames, right? We do not use indicators at all, but technical indicators, these are mathematical calculations based on historical price data, right, and volume. These can include your moving averages, the RSI, your MACD, or your stochastic oscillators, right? So fourth, we use technical analysis to help with to find our support and resistance levels, right? These are levels at which a currency pair tends to find buying support or selling resistant interest, right? They play a crucial role in identifying potential reversals or breakout points. We use them for volume data, right? For pattern recognition also, because traders, we look for chart patterns like, head and shoulders, flags, triangles, and more, because we look more at that. These patterns can signal potential trend reversals and continuations, right? Also, news and events, these are optional. We tend to avoid economic news releases, right? Because they may bring too much volume in the market, and can sometimes blow through your stop loss levels, right? So while technical analysis primarily focuses on price action, which is the kind of traders that we are here at the exchanges say, traders, other traders may also consider relevant news and economic events as they can influence market sentiment, and also because they can bring in enough volume, right, or momentum to price to give you like maximized profits, right? Remember, while technical analysis is a valuable tool, it's not foolproof, and it's often used in conjunction with other forms of analysis, such as fundamental analysis, risk management, to make well-rounded trading decisions. Right. So what are the different kinds of analytical methods used to predict price movements? So traders, we're going to go through this, and we're going to go through the chart, and I'll be explaining everything as we go, right? So that I'm going to start easy with candlesticks, and then from candlesticks I'm going to show you the anatomy. I'm going to show you what candlesticks represent, and then from there we're going to move forward, and we're going to look at trends, right? And then our trends is going to give us our support and resistance, right? And our supply and demand areas, right? And then from there, we're going to look at structure, right? Because trends give you structure, and then from structure, we're going to look at other forms of technical analysis. That's when we'll move into the advanced technical analysis that we use here at the exchanges, say, in the form of institutional order flow, right? So let's continue. Okay, so what are the different kinds of analytical methods used to predict price movements? So there are three main types of analytical methods used to predict price movements in financial markets, right? Which is technical analysis, right? What we focus solely on, right? So technical analysis relies on historical price data, volume, and other market indicators to forecast future price movements, right? This assumes that past price patterns and trends tend to repeat themselves. And you will see that that is actually true when we look at the chart, right? Chart patterns, right? The methods we'll be using will be, smart money concepts, but you could also include, your chart patterns, right? And technical indicators like the ones we spoke about, your MACDs, your moving averages, RSI, right? We'll be using support and resistance levels, trend lines, pattern recognitions that are commonly used in technical analysis, right? And then there's number two, which is fundamental analysis, right? Fundamental analysis involves evaluating the intrinsic value of an asset, right, by examining various economic, financial, and qualitative factors, right? It aims to assess the overall health and performance of an asset or market. So you will be using apps or some websites like Forex Factory. We use Forex Factory to find our fundamental economic releases, but we use them in order for us to know when to possibly stay out of the market, right? So factors to consider are economic indicators, right? The GDP or inflation rates, interest rates, geopolitical events, company financials for stocks, right? And central bank policies and news events. Number three would be your sentimental analysis, right? Sentimental analysis gauges the mood and opinions of market participants towards a particular asset or market, right? It attempts to measure the collective psychology of traders and investors, right? This is very important, right? This is very important because if 99 or if 90% of traders lose 90% of their money within 90 days, it's very important to be able to identify and understand what majority of the world is thinking, which is something that can easily sometimes be avoided, but is very important, right? Because sometimes you might want to know what everyone is thinking in order to make proper decisions in the market, right? So you'll use news sentiment, social media sentiment surveys, and market sentiment indicators like the fear and greed index, right? These are used to assess the market index, right? The market sentiment. Each of these methods has a strength and weaknesses, and many traders and investors use a combination of these approach to make informed decisions. It's important to note that no single method can guarantee accurate predictions, right? And market behavior can be influenced by various unpredictable factors. As you will see, um, every traders do get stopped out. It doesn't matter if it is the best or what, it is part of the game to get stopped out. And so you have to know that your market analysis will always have flaws, right? But those flaws are good. You know what I'm saying? Because no one can predict it. You can use AI, but still it's the same way. It's very important to note that so that you do not beat yourself up, beat the wife, kick the dog when you get stopped out because your technical analysis. You can use all of these methods together, which will give you a greater RR, right? Risk to reward ratio. But you must understand that, that's part of the game. Losing is part of the game. And, that's what makes you a greater trader. The wins are actually in the losses. You know what I'm saying? So thank you very much for tuning in. We're going to continue on to the charts now so that we can understand how to use technical analysis.